Welcome back to the channel, where today we dive deep into why junior gold stocks are set to shine, with exclusive insights from the renowned expert, David Erfle. With rising investor sentiment, promising signals for gold bulls, and the January effect driving momentum, there's no better time to be informed about these powerful market dynamics. Whether you're a seasoned investor or new to the game, this video is packed with information that could shape your investment strategy.
What about investor sentiment? When I get a lot of feedback, primarily through YouTube comments, where people will comment on videos over the last 5 years that I've published, and they'll come to me today, I'll read it, and it's just ultra negative. I think it's the most negative gold sentiment comments that I've seen in 5 years of doing this. And they're comparing to what we've seen in the last year, right? As things have pulled back. But you were saying to me earlier, though, if you compare backwards to where we were previous, we're actually in a decent place right now.
Absolutely. We're in a very good place here. I mean, if you'd have told me at the beginning of the year that gold price was going to end at 1,800, and yet the GDX was going to end around 41, I would have laughed you out of the room. Yet here we are. Basically the GDXJ is trading at an area where it last traded consistently when gold was about $1,500 an ounce. Gold, the area that is trading now was strong resistance when gold was attempting to break out, for years above 1,400, and it finally broke out, and the GDXJ got to around this level, maybe a little higher, and started to go down again. But the gold price was a lot lower than 1,800. And also, a good comparison, a better comparison for the climate right now is the comparison of late 2015. Because in late 2015, you kind of had the same situation where you had the Federal Reserve was talking about hiking rates for the longest time. And the gold stocks began to bottom around September after a very, very brutal bear market, which saw the GDX go down 85% in like 4 years. So that bottom was being created before the Fed actually announced a rate hike. And when they finally announced that rate hike, a few weeks later, I even remember the day, it was January 17th, where the gold stocks, after making a 6-month flat bottom, had this huge spike lower where it broke that support, and it did a sharp reversal on that day, and it didn't look back. It went up like 160% in 6 months. Now, is that going to happen again this next January? I don't see something like that happening again, no. But I see comparably speaking, what the Fed did was they announced a change in policy, a major shift in policy. And that's what they've just done recently at their December meeting in 2021 as well. They've announced a major shift in policy. All these other central banks are, the EU has been at negative rates since 2014. They can't even talk about, easing up on their QE, let alone raise rates. And here's the Federal Reserve, increasing their tapering, saying they're going to wrap it up by March, and they're going to start increasing rates. And the market is priced in, 3 rate hikes, starting to price this in. Meanwhile, the gold price is in an uptrend. It's actually, you wouldn't think of it being in an uptrend, looking at the gold stocks and what they've done. But the gold price has been in an uptrend since it made that spike low at 1675 in August in the overnight market holiday trading, where there was hardly anybody trading.
David Erfle offers a comprehensive view of the current sentiment in the gold market, which is crucial for understanding the potential of junior gold stocks. Investor confidence in gold has been growing, fueled by global economic uncertainty and inflationary concerns. This sentiment directly impacts junior gold stocks, as they often outperform in bullish gold environments. While senior gold companies provide stability, the real growth potential lies in these junior stocks. With risk comes reward, and Erfle highlights how strong sentiment can accelerate gains for these smaller, more agile companies. Stay tuned as we also introduce Augusta Precious Metals, a trusted company offering gold, silver, and other precious metals at competitive prices.
It's funny, and I alluded to this earlier in this conversation. I said that this consolidation process and consolidation processes, especially in the gold market, can be extremely frustrating. And this one has been extremely frustrating. If you're a trader and you're trying to trade bullion, you've seen a series of bull traps and bear traps to get you out of position. So they're just, you know what? I'm out of it. Why do I bother with this sector when everything else is going up? So this apathy is seen with the volume of the shares going lower and lower and lower and lower. It's like, I was taught, to buy value and never sell a dull market. And the mining sector now is the dullest market on the planet, but it's also the most undervalued. I mean, you've got mining stocks trading at 5 to 7 times cash flow, and you've got S&P stocks trading at 15 to 20 times cash flow. With gold at $1,800, these miners are making a lot of money, even though inflation, is eating into their profits. That's true. All in sustaining costs have risen from like 1060 to 1130 in the past quarter. Their margins are getting squeezed a bit, but there's still a lot there, at $1,800 gold.
Dave, final thoughts. Overall, you're positive for gold bulls in 2022, would you say?
Yes, a lot more positive than I was at the beginning of last year.
The resurgence of gold bulls is a trend that can't be ignored. As Erfle explains, we're witnessing early signals of a long-term bullish run for gold, largely driven by global economic instability and central bank policies. Junior gold stocks stand to benefit the most from this trend, offering exponential growth opportunities compared to their senior counterparts. For investors looking for high-risk, high-reward plays, junior gold stocks are positioned to capitalize on the momentum of a gold bull market.
But a caveat to this is the only participants in this January effect are probably going to be resource speculators, unless the stock market begins to roll over and we finally get some generalist interest in this sector. That's what we need, because we've been basically trading amongst ourselves, ever since the gold price topped out and the generalist investor ran away from this sector at the beginning of the year. You saw it happen at the beginning of the year when this year, when January started, we had the first week, we had a nice move, right? And, fortunately, I took a lot of profit during that week. And ever since then, it's been slowly drifting lower and lower. And I think that's when a lot of those retail investors got out of the sector.
Got it. You know how you always say it's just us gold bugs trading amongst ourselves. And I have an anecdotal story to that. A few months ago, I sold some shares of a company, and then I got an email that someone said, I bought shares of this company today at such and such price. And then I looked at my account and I'm like, I sold you those shares. It wasn't a lot, but it's just an anecdotal story, like to your point, that like you almost know the people you're selling to at this point. Right. But it's a powerful point. If we're going to have a strong move in January, February, and beyond, we don't just need a pop in the gold price. We need the general market turnover so that we get an influx of new buyers, because that's what we're lacking.
Exactly.
The January effect refers to the seasonal uptick in stock performance, and junior gold stocks are no exception. Historically, gold stocks, especially juniors, tend to see a rally at the beginning of the year. David Erfle breaks down how the January effect could push junior gold stocks higher, creating a window of opportunity for investors. This effect, combined with rising investor sentiment and promising gold bull signals, makes the early part of the year a crucial time to watch. As Erfle suggests, timing is everything in the world of junior gold stocks, and capitalizing on this seasonal trend could lead to significant gains. As we've seen from David Erfle's insights, the potential for junior gold stocks in 2024 is undeniable. With strong investor sentiment, a promising gold bull run, and the January effect on the horizon, the time to act is now. But remember, diversification is key. While junior gold stocks can provide high returns, pairing them with tangible assets like gold and silver is a smart move. That's where Augusta Precious Metals comes into play, offering you the chance to invest in physical gold and silver to secure your wealth. Click the link below to learn more about Augusta Precious Metals. And don't forget to like, share, and subscribe for more insights.